Good morning, everybody, and welcome back to Schwab Coaching for now, the Tuesday edition of Trader Talk in today's market. And I'm your host, Kevin Horner. It is a very chilly morning here in the Denver, Colorado area, although a little bit warmer than it's been the last couple of days. Kicked it up all the way to 10 degrees today. I hope you all are staying warm out there as well. We had a brand new, fresh week on deck, everybody, a short week. And yet plenty to get to with all of you. So I'm excited to kind of look through a slew of charts, lots of them to get to, obviously. We're going to hit up the majors as we always do, but we have a lot of upgrades, downgrades, initiated coverage, and so forth. So we're going to look at a lot of individual equity positions here today as well, as I work through a lot of those headlines with all of you. Say hi to my friend Barb Armstrong in the chat. She, of course, is going to keep an eye on all of you and answer questions that I'm unable to get to. I'll certainly try and keep an eye on things there as well. It looks like many of you are dealing with a lot of the cold temperatures this morning. I know my counterparts in Texas are certainly dealing with a little bit of snow today, which fairly uncommon for those of you in Texas. So anyway, with that in mind, we're going to move on to disclosures. But before I get there, I do want to ask you, if you're not already doing so, please follow me on X at Kevin Horner CS, and you can do the same for Barb Armstrong CS. We would both greatly appreciate that, everybody. So thanks for following if you're already doing so, and thanks for the new follow if you're going to do so as of today. As always, we want to remind you that our discussion here is exclusively informational and educational. We are not in the business of making recommendations here, not for individual positions, certainly not for strategies or specific approaches to trading the market necessarily, so keep that in mind. We do talk technical analysis quite a bit. Remember to think of technical analysis as complementary to your fundamental research, meaning simply we think you can use technical analysis as a piece of your puzzle when basing decisions. We just don't encourage you to base decisions only off of technical analysis. Now, if you're a new viewer here, our agenda is pretty consistent on Mondays, Tuesdays, Wednesdays, and Fridays. We do a top-down review of the market. We start with looking at the major indices. So today we're going to look at the S&P 500, the NASDAQ 100, the Russell 2000, the semiconductor index as well. And we're going to take those and then move into the sectors of the market to get some clarity on how money is being deployed in this first few weeks of the year. And maybe today in particular, with it being the first day of the new administration, we may have some shifting dynamics in the market as well. So plenty to keep an eye on and try to get some levels set for us as we do that. As I said, a number of upgrades and downgrades today, so we do expect to get to those in the back half of the discussion. So as I pull up the S&P 500, the first thing that jumps out at me was Friday's move was pretty good, right? We had a close above the 50-day moving average. First real significant close coming with the break of the downtrend line as well. So if I were to zoom in on just what's been going on since early November, the throwback to the gap low that we made from November 5th, the election day, into November 6th, when things were fairly clear as to what we were going to get. We've had a wonderful push higher off of that lower low. Now, today's action is significant because we are looking and potentially making that short-term higher high. So we have what short-term traders could be positioning as a potential continuation move to the broader move we've seen over the last multiple months. And I don't mean just since November. I'm talking the 2-year-long rally we've been looking at dating back to really August or summer of 2022. So you've been looking at a significant move. And as you can see on the weekly here with the break of this, if this in fact holds this week, this is going to look fantastic from a continuation standpoint. And so that's what we're watching here as it relates to the SPX. Does today's enthusiastic open carry us for the week? Does it give us this look of continuation on the weekly chart in addition to the initial look of continuation on the daily? As always, we have to be thoughtful of our time frame as we're considering these. So you short-term traders, yeah, it's a great start today. We want to see a finish that resembles today's open, because a new high at the close would more significantly encourage bulls to say, yeah, we have got new opportunities and we can start building new trades against short-term support zones, which could be that 50-day moving average, for example, looking at the low from Friday, right around 59.75. So new money deployed here could be working against that 59.75 low. That gives you about a $50 or 50 point, risk level for what could be, if we were to rally into 6,100, about 70 points of upside. Not negative in terms of risk versus reward, but also not substantial. It's not a dollar of risk for $2 of reward or more, unless you, of course, think that new highs are coming, in which case you certainly have maybe a little bit of a upside opportunity as it relates to risk versus reward. So this bears watching, but we like the fact that we've got a continuation on the open today. And again, the last note I want to make is just how Friday's action was a little unclear. Remember what that doji might signify. Indecision is what we commonly suggest comes from a doji. And let's just revisit the doji conversation. What is a doji? By definition, what we have here is a close and an open that were essentially on top of one another. The open on Friday was 59.95 and our close was 59.96. So about a 1 point move. But you notice our high for the day was 6,015 almost, and our low was 5,978. So we pushed the SPX 20 up and 20 down, and neither bulls nor bears could really grab control of that price action for the day Friday. So that suggests that we had this indecisive move on Friday and tells us that today, tomorrow, the remainder of this week is very, very important. So as good as we've got it to start, we want continuation. We want to see this carry and follow through for the rest of the week. What we don't want to see is today, tomorrow, Thursday, back below the 50-day moving average, which could tell us that this may be a fake move, and that's a possibility. So again, I can't tell you what's coming next. I can only tell us how maybe traders are thinking about things and how they might be positioning things. So on a very short-term basis, if we move into that 5-minute 5-day, 5-minute bars, you'll notice, and I see that some of my details here have become a little squirrely. I'm going to make some changes to this. But you can see that R1 level, everybody, that's that first ledge of these pivot points, was our gap zone, and that becomes potential short-term support today. So many traders in the short run are going to watch that 6,015 for short-term support. Hopefully that's what we're looking at here today. Now, for those of you wondering about those pivot points, the reasonings I can come up with, the best I can answer as to why they appear as dots is in my settings here. And I noticed just now that I've got this set to 15 minutes, so I need to change that back to 5 minutes. And then there's these pivot point lines, the defaulting into these dots. So I can change that, and I'm just going to show you how I'm doing that real fast, everybody. You just come into your pivot point gear and change this from auto, where you've got R3, R2, R1. We're just going to change this to numerical. And doing so, actually, I can't tell you the reasoning behind it. I just know that it works. So when I change these to numerical, my lines will shift to a solid line in lieu of this dotted line visual. So there we go. So now my pivots are set the way that I would like them to be. And just a quick reminder as to what those are. They're simply looking at the prior day price action, everybody, looking at the open, high, low, and close, getting an average price for those, and setting that as the pivot point. In my chart, the pivot is there in the middle, and that gives us an equilibrium price around which traders may expect this particular index, the SPX, to trade for the day. And the fact that it gapped one of those levels is optimistic and provides a little bit of bullishness at the open, and might provide short-term traders that area for short-term support to keep a very close eye on here, right? So keep an eye on R1 at 6,015 for the SPX. Now, if we move on into what's going on with the NASDAQ today, we're up a little bit less, only 0.2% here. You'll see that I'm going to pull this back. We'll look at that 5-minute bar once more. Friday of last week, when we were talking about the potential breakout here, we did trade once again through that downtrend line. And so we have this optimistic feeling. But what I think some bulls will tell you is they're not liking what's happening, at least not in the first 10 minutes here today. They don't like the fact that we had a strong open that is now filling lower a little bit. So that stands out. So we'll have to monitor that. But this is nonetheless a move through the downtrend line. The red line here at about 21,700, everybody, that would reflect a new short-term higher high. And so we are waiting to see if we can get through that level still. Not there, but 21,700 provides us maybe a target in the short run if traders are looking for this, for a potential zone to maybe consider taking some profits on any move. I mean, just if we looked at if you waited for the hold move, everybody, and you bought at near the close on the date of the 14th here, the close was 20,757. So if I just put my line at around that area to where we are right now, you're still up about 3% off of that move over the last week here. So again, don't hesitate to raise your stops and become defensive along the way if you feel you need to. Remember, it's imperative that we traders along the way, we can continue to raise our stops as things are moving in our favor, everybody. That's okay. What we don't want to do is be surprised by price action. So if you're finding yourself in a position that says, boy, I didn't expect that, now I'm over-invested or what have you, make sure you're setting some levels using something so you know where you will look to lighten up positionally. Dollars exposed to the market here at these upper levels. If we get continuation, it's going to be fine. It's going to be fine and fun to participate in, no doubt. But if it does not maintain and we are over-invested, well, then that's going to leave us maybe a bit head over skis and perhaps uncomfortable. So always, my one encouragement is to always feel as though you're fully comfortable with a major pullback in the market should one occur. You never want to find yourself too invested or having too much money on the table when you could make sure you've got a little bit of dry powder on the sidelines, always ready to act. That's one way that some traders will kind of battle these internal thoughts, that internal monologue that might keep you from taking decisive action. Sitting with a little bit of cash can make that a little easier on you. So good start here in the NASDAQ, a bit more of a fade than we'd like to see. If we look back at that 5-minute bar, that R1 did not hold. So that cannot likely be maintained as our short-term support zone. So watch 21,430 there, everybody. If you're a very short-term trader, that is the true pivot based on Friday's price action. That now becomes very short-term important for the bulls here to maintain. All right, what about our small caps? I imagine we're getting a nice little lift here because small caps are obviously interest rate sensitive, and we are getting some selling in interest rates today, or rather yields are falling as a result of people being comfortable buying up U.S. Treasuries. So I'm going to talk about that in a moment. But what I think a lot of traders are going to document today is the significance of the level through which we are moving. 2290 and really 2290, 2300. 2300 if we were going to be very picky about round figures, but that represents kind of the high trade for the day. But my line, as you can see here, was a significant line, everybody. This is not just resistance based on my 3 ovals. It had been resistance in the weekly chart. It had previously been support as well. So some resistance back in here. Back in here, we held it a little bit. So now we're trying to work our way back through 2,300. So we are perhaps in the midst of a bit of a Russell move, but again, early in the week to define it as such. But like I said, I think it is tied directly to the TNX. TNX moving lower here today in terms of the yield, that is. So the yield is falling. And just remember what that's about. Yields are falling when we see Treasury buyers stepping in and buying U.S. Treasuries. Now, why would perhaps traders and investors be buying U.S. Treasuries? Well, there were a lot of fears heading into yesterday's inauguration that President Trump might immediately go with a slew of tariffs on specific imports, and that did not happen in a sweeping fashion yesterday. So by virtue of the fact that there was not this very big step to impose tariffs immediately, as may have been suggested by the president himself or by those pundits who were monitoring this stuff, nonetheless, it has not as of yet occurred. So because that didn't happen, maybe what we're witnessing is a little bit more confidence in the U.S. market, a little less concern about tariffs impacting inflation, and that can absolutely lead to some selling in the Treasury yield by virtue of the buying of U.S. Treasuries, a signal that perhaps there's a bit more confidence, perhaps, in the U.S. markets moving forward. So that might be what we're witnessing here as it relates to the 10-year move and the movement in the Russell. But if you're a Russell trader, you like to see what we're getting here today, a near 1% move in the small caps, and potentially, if nothing else, again, traders could look at the low we've made today. You could position yourself there. Other traders might look at the fact that we're now 4 days above the 20-day in orange and might position against the 20-day. The fact that we're 4 days above it here, assuming a hold today, that may give you some confidence that the new short-term trend is in fact bullish, as evidenced by the slope of that 20-day kicking up here. So you got that little fish hook. And so some traders might just look and say, yeah, you know what? Under the 20-day, I'm not comfortable. So I'll just use that as my downside exit strategy. If we trade back below it, I'll move on. As long as we maintain it, we'll stick with the Russell. And then layers above you, maybe it's the 50-day, right? 50-day at around 23.25. Moves through there will give those traders chances to potentially raise those stops, right? So if you're a trader who's taking position in the Russell today, you might look at the 20. You might let it run a little bit. If it captures the 50, traders might then raise its stops to the breakout level here, right around 2280 potentially. That's one zone some traders might consider. And then if you do get the 50-day and you hold it for a few days, that could also become a new support zone, an area where traders might position exit strategies. So improvement on the Russell here as well. It's nice to see. It's been a little bit of a struggle for the Russell since we peaked back in November, as you can see. So good to see us back up above the 20 and head in the right direction there. All right, what about what's going on with the semis? Semis are still in the same battle, everybody. Let's keep this in mind because we can't get ahead of ourselves as much as we want to believe in what we see and believe, rather not what we see, but rather what we are trading today, that we've got opportunity for more upside. We certainly could. But the fact is, everybody, we have been rejected at 53.75 and above, 53.75 to 5,400. We've been rejected there 6 times in the last 6 months. That stands out. That means that we as traders, we maybe are getting a little bit ready to expect a breakout, but we can't expect a breakout until the breakout occurs. If you expect a breakout early, you can find yourself overdoing your investment, and it can misplace your exit strategy, right? So if you are trading it today for the belief of a breakout, you're kind of stuck in a difficult spot, because where would you put a stop order in this space if you were looking beneath it? Meaning, where would you say, yeah, I was wrong about this being ready to break out? Would you go with yesterday's low or Friday's low, Maybe. That's about 40 points away or so. Would you go with 2 days ago, low of Thursday, which would be about 100 points ago? Or do you have to go all the way back to the most consistent trend line, which is the uptrend line that has been working since the August 5 open that we had? And you can see here, everybody, there's been a few tests, right? So all the way back to August 5, we've got an uptrend line working. And a lot of traders would tell you, look, if you are ready to be a buyer here, your only way you can position your risk tolerance is to the downtrend line, because all of this in between might just be noise. And that's why some of you traders are going to wait for a close, maybe over 53.80, maybe even 5,400 to give you a validated higher high, right? And a validated higher high could give bulls reason to start thinking about the semis here. You could start positioning now, but you could easily be wrong because we are right at resistance. So maybe the answer for those of you who are a little bit excitable and want to believe, maybe you're you're Scully and Mulder and you want to believe, you're waiting for instead of waiting for the breakout, you might start small, right? So if you think it's going to happen, but you're not convinced, 10%, 20%, 25% of what you ultimately want, let the trade develop. Now, if you can be cautious and sit on your hands, it might be a little bit more appropriate for many traders who are looking for some confirmation here. But I can understand not wanting to supposedly miss the boat. I don't believe in that process necessarily. I'm a believer that confirmation increases your likelihood of being on the right side of the trade, which might even be better than being early to the trade, right? So be thoughtful in your process is what I'm ultimately suggesting here. But yeah, we could be seeing something developing, but let's get through 5,400. I think we're going to see traders getting a little bit more confident there. All right, so we've hit up the majors, right? We've seen the S&P 500, we've seen the NASDAQ 100, we've seen the Russell 2000 and the semis. We've also seen rates. Let's take a quick peek along the sector action, and let's see what we can learn from here. There have been some intriguing moves of late, to say the least. A couple of these areas that I want to address. One that I have been very disappointed with has been the staples sector. And that's because it's just been on a horrible downtrend since early to mid-December, as you can see. Now, today, we are rallying the staples into the confluence of the 20 and the 200-day moving average. So this could be short-term significant, maybe not as significant as getting back up above that 854 zone, but it does tell us a little bit about the lack of concern in the overall market here. I've been expecting staples to provide a bit of a buoy to the broader market, but we've just been selling staples pretty significantly here. Now, we're also seeing interest rate sensitive groups moving favorably today. So you have a rally in utilities and a rally in real estate. Okay. So both are slipping through areas of potential resistance, now could become support. So we're not shocked to see that, are we, everybody? Simply because we have yields falling a bit in the 10-year, giving lift to some of these higher yielding or higher correlation to interest rate groups like utilities and like real estate. We've also seen some good moves in financials continuing here. Nice to see, because really what we've had since the gap move here last week on Wednesday has been a true gap and go situation. So it has only continued higher here. The financials looking pretty strong with this move, everybody. So maybe some positioning here. Day 4 against above rather the 50-day moving average standing out from that standpoint. So that looks pretty intriguing to see as well. And if you're bullish, you really like what you're seeing out of the financials from that standpoint. 4 days above the 50-day moving average with, I'll just note, a real nice upslope to volume on the breakout. So you've had some rocket fuel kind of providing the move here in financials. All right, let's peek in on that dog. How about healthcare? It's been a dog, and yet it's rallied here into the moving average. So we're going to have to keep a close eye on this. We've noted a 50 to 200-day downward cross in healthcare. Healthcare has just been a real brutal move, but we've rallied into what could be potential resistance here, everybody. My hockey, the hockey stick portion here, as you can see the blade kind of running into the long end of things. This is getting to a point where we're going to see a break one way or the other. Obviously, bulls want to see us above that 50-day and using it as new potential support. We are right at it. And the truth is that buyers back here in the healthcare space, you know, that was about 75 points ago or so at the lows. This might represent an area where some of the traders are in healthcare might be looking to take a little bit off. Not to suggest that you're not necessarily improving, because I think it does stand out, everybody, that we are 2 weeks above the 20-day moving average. Remember, back here, when we were above the 20-day, it was only a week, and then we were right back below it. Now here, this is giving enough time to allow that nice curvature of the 20-day moving average, kind of letting us know that things are shifting a little bit. So this is starting to look a little bit better from the healthcare side of things, everybody. And I think certainly an improvement, if that's what you've been waiting for. Healthcare has just been really, really rough. So we're liking at least a minor shift here in healthcare. We'll see if that continues. Now, oddly enough, while the NASDAQ is challenging and trying to maintain green today, tech is in the red. And we're going to use this as a kickoff to move into some of our stocks in the news. This is an interesting spot. How are you all feeling when you look at tech here? Okay, I want to hear specifically, what is it that you see on the chart that's either giving you confidence or giving you a lack of confidence as it relates to technology? We do have an uptrend still, and granted, we're looking at the August 5, so we've got, higher lows in here, right? There's one, here's another higher low, here's another higher low, and so even this would be considered matching lows, right? But what else is standing out on this chart, everybody, when you look at this? Is anybody else feeling a little uncertain or perhaps even a little uncomfortable? And I think it has to do with the location of our price action below both the 20 and the 50-day moving averages. Good. So, okay, Gary says not holding on to too much tech now. Dragon Rider, not too concerned. Holistic Trader, no confidence, feels like it's a little expensive. Could be the case. So let's just talk about this briefly from the standpoint of the trend and how traders may position themselves. If you're bullish, you may want to be patient here. And the reason for patience just could be the inverted nature of risk versus reward, right? Because we are right at potential resistance. And if we can't move through the high we made last Thursday, which is at 46.25. If we can't move through that high, then this will appear as a rejection. And then our short-term best case scenario for support becomes the low we just made, right? At around 44.30. So that's about 150 points away. And from where we are right now, with knowledge that we would say, all right, if we traded through that high here at 46.25, tells us that we have about 50 points of upside to be proven wrong for the potential to be targeting the lows. That means it stands out from a risk reward basis as more opportunistic for the bears. However, possibility certainly exists that we're going to get right back up above the 20-day moving average. So if nothing else, risk versus reward may favor the bears, today, but a close above the 20-day and the 50-day collectively may give bulls that confidence to be stepping in, and then they can start to position against maybe this last low at 45.80. If this is in fact a low, then they can start looking at potential for upside from here, and then that risk reward flips. But the risk reward only flips if price action gets us back up above the 50 and the 20-day moving averages and essentially gives us a new short-term high. So that all stands out to me. And the main reason is that, look, this has been a good uptrend that has been broken, right? Whether I drew it from there or I could also, let me just adjust this a little bit. Let's take it from here. And let's just capture some of these lows in here like so. So some of you would say, yeah, we've already broken that trend line. And unless we get back up above that trend line, they're not going to have a whole lot of confidence. And that trend line coincides with that high from last Thursday as well. So all of this stands out. And I think some of you, if you're looking for confidence, it's that 46.50, 46.40 area where over that ledge might give us that visual of continuation. So tech, a little bit questionable maybe, but certainly one we're going to continue to keep an eye on. And as I noted, with plenty of stocks in the news today, we're going to use this is our jump off to move into stocks in the news. And I'm going to lead with a downgrade today. And that's a downgrade. It is a price target down, not a downgrade per se, but it is on Apple. And, I brought this up last week in Twitter, X. We were talking about how we had broke the uptrend line with the move we made last week. We rallied back into that uptrend line. Now, how different does this chart look today versus the one we just looked at in technology? I'm not sure it looks a lot different at all, except that maybe Apple is ahead of technology in terms of its move here, right? Apple closing in on its 200-day moving average. Last trade here, just shy of 222. The 200-day is down there at 217, so a couple percentage points away from making it to the 200-day moving average. But you know what? That may be the impetus to be buying in Apple, of course. When did we last see the Apple at the 200-day? All the way back here in May of last year. We had to gap higher with the earnings report. And it was a gap and hold on the 200-day. And that was an excellent entrance signal after the gap higher and then the test of the 200. And if you'd have been stepping in at 180 there, even at the 200-day here, you'd be looking at somewhere between 35 and 40 points of profit, even if you decided to be a seller on a break below the 200-day moving average. Obviously, if you've been managing such a trade along the way, many traders would have been looking to take a little bit off with a break of the 20-day. Many more would have taken some off with the break of the red line. That was our breakout spot that has now come back. So maybe Apple is going to be the slingshot opportunity for technology, but it does appear as though it is leading the tech space lower initially. We'll see how the rest of that sector acts. It's not alone. There's a number of obviously familiar companies in technology whose charts are going to be a little bit resembling this one in Apple. But look, I just think it's a real struggle for the S&P 500 if the second largest company in the space proves to be under pressure. And that's what we're getting today, Apple under pressure. But the truth is, Apple's been under pressure for the last 2 weeks. And yes, technology as a space looks like we are in a little bit of a precarious spot, but we're going to see how that plays out for the rest of the week. So plenty to watch as it relates to Apple. I should give you the news on it. I mentioned that they received a price target adjustment. JP Morgan lowered the target on Apple to 260 from 265. Now, that seems like a pretty minimal adjustment to me. They maintain an overweight rating on the shares. The concern heading into their earnings, which, by the way, is coming here on the 30th of January. That is after market close. The concern heading into the earnings print is less about the quarter itself, more about the outlook going forward, according to analysts at JP Morgan. The firm says that Apple's share loss in China is likely to continue, with the company already past its product cycle peak and with the consumer subsidies from the local administration to enable smartphone replacement for low and mid-tier phones. And that excludes that high-end user phone, that high-end smartphone. So plenty to watch here. Small adjustment on the price target. I don't think that that's necessarily maybe leading things down, but it's certainly having an impact today in the movement, and maybe a bit of a combination between the story today, this reduction, along with the technical breakdown we've seen over the last couple of days. All right, moving into a couple more. We also had let me see if this was just a price target. Yeah, I had two additional two downgrades in addition to the JP Morgan price target reduction. So Apple was downgraded by Jefferies. That was to underperform from hold with a new target that is just shy of 201. Previous target was 211 and change. So that stands out. And again, reduced based on forecasts that they expect to reflect weak iPhone sales. Now, Loop Capital also downgraded Apple to hold. Previously had been at buy. $230 price target here. The suggestion is the firm's supply chain checks suggest a material iPhone demand reduction. Okay, so what we're hearing is a lot of consternation around the most recent release and orders being under expectations. That's not going to be fantastic for Apple necessarily. So we're going to have to keep a very close eye on this. Does this manage to destroy the overall trend we've been seeing, or is this merely a healthy pullback in the midst of a really strong move? And the truth is, move all the way down to the 200-day from the peak. No one who held at the 260 is going to love it, but it's less than 20%, everybody. It's a 16% pullback to the 200-day moving average. Not exactly a a run for the hills type move, right? Might not feel great, but remember what we commonly see. Investors, longer range investors, do tend to like to expose money to the market in and around 200-day moving averages. We might be there as early as today, as some of you are pointing out. So we'll see if that manages to come to pass. Okay, so there was an interesting move as it relates to technology and in a big company that has a lot to do with it. How about a couple of intriguing upgrades today? One of them in the financial space is LendingTree. LendingTree was upgraded by Northland. This is a group with which I'm unfamiliar, but upgrading LendingTree to outperform previously at market perform. Price target here on Tree at $60 a share, stating that 2024 was the year of insurance and revenue growth with little flow through to the bottom line, says the analyst at Northland. But they believe that in 2025, it will be all about insurance again, but also with growth in the consumer segment and better adjusted earnings before interest, taxes, dividends, etc. So they're expecting improvement. Now, the price action here is potentially significant, everyone. Notice we've been working against that 20-day in orange. Notice how many times we've seen tails indicating moves through these highs, right? Lots of tail indications of, hey, good action in the morning, not held, not maintained. So we've seen that stair step lower. Well, today reflects a significant move through what could be considered former major resistance, now potential major support. So what we want to see is really, do we maintain the 50-day? Do we maintain the breakout? And if you're feeling optimistic, you could certainly validate today's movement as a way to use the 50-day for short-term support and build an exit strategy to the downside, working against that 50-day moving average. This is one of those developments where the trader might say, yeah, that risk reward is on my side, and they might lean into it here. Downside, if you just went with the 50-day moving average today, that's at 41.83, right? And here we are trading it right at it. So we're sitting on it today. So you're going to have to use, if you like this, some semblance of price action below the 50-day moving average. Maybe that is an average true range for the stock. An amount of the average true range below the 50-day moving average might be one way to consider that. But if that's the case, and then our upside is the 200-day here, which is just shy of 47, I mean, you're looking at a potential for 5 points of upside, meaning you could risk as little as $1 and have $1 of risk for potential of 5 points upside. That is an excellent risk versus reward. Now, of course, that assumes the trader believes you can get to the 200-day moving average. So you have to have a bullish outlook here. Okay. And I'm not suggesting that that's where it's going, but if that is the visual that the bullish trader is taking, then risk reward sets up favorably for the bull at this point in time. Last note on Tree, it is really nice to see that RSI moving through a 55 level, and the RSI really trading at the highest we've seen it since October of last year when things started to break down. So relative strength indicator giving us a bit of an indication that this is perhaps a little stronger of a move than we've seen. So maybe a way to position here in the short run. Nice little pop on LendingTree. And then a couple other upgrades today in a couple of these retailers. So I want to look at Ulta. Ulta was upgraded by Morgan Stanley, making a real nice move today, up 3 1/3% here. But what I found intriguing about the Ulta trade, everybody, wasn't so much the upgrade to overweight from previously being at equal weight. New price target at 500, which is up from 430. But the Morgan Stanley analysts saying that the industry, the beauty industry, should continue above average growth in 2025, believing that Ulta's share gains within beauty should improve in 2025 from their 2024 bottom, and expects the company's sales and margins expectations as reasonable for 2025. So they see potential for earnings and valuation upside in Ulta at Morgan Stanley. I think what stands out for many traders, though, everybody, is just going to be this. I mean, look, it couldn't be a whole lot simpler than that, right? You've got the 50-day. We've got a 50 crossing the 200 to the upside right here. And as is commonly the case, everyone, that's a longer-term idea. So if you were patient and said, well, we got a 50 crossing the 200 to the upside, let us find some support before we step in. Well, I could certainly see traders working against that 50-day moving average. Maybe you start a position, stop exits below the 50-day, and potential exists to move as high to as maybe into the gap area here, everybody. I put an oval on there. Really what I wanted was let's just look at something like this. Nope. Try that one more time. Rectangle. There we go. So maybe the gap, maybe this zone up here provides potential for resistance, and we're trading at 419. If you can get to 460, you're looking at potential for 40 points of upside here, which is intriguing from a risk versus reward standpoint once more. So that could make the list for some of you today. Another one in the same space, not beauty specifically, but retail, was Urban Outfitter. So Urban is making a little bit of a breakout here today, right? Broke the downtrend line right through here. And you guys have heard me say this. This is a steep bull flag. But a lot of traders get going on day one of a move where you break out like this, right? And you might consider, some traders might consider stepping in with a small position to see if this continues. Gives you a new high close today, potentially. Maybe you could trade over 59. And see the continuation of this move. This has been a really long run, significant development since the fall of last year. My goodness, 35 to 59. How's that for a rally, everybody? That's some wonderful stuff. So the news here was just, again, Morgan Stanley upgrading Urban Outfitters. Target here at 63, up from 41. And again, Morgan Stanley upgrading Ulta, and also upgrading AEO, American Eagle. And the difference that I could see is pretty significant as it relates to the downtrends here, everybody. You've got a little bit of room if you think that it can rally to the downtrend line, but there's a bit of a difference between how this AE looks compared to, say, Urban or even Ulta, both of which seem to have moved through significant zones. This one seems like it's a bit more oversold, might have a little bit of a potential relief bounce here. But yeah, pay attention to what works through that 50-day. If you can get through that 50-day in price action right through here, everybody, because you've had a few tails in there, we've been up to there and we've been rejected. You can get through about 1750. Maybe we can sneak up to 1850, 1865 and the downtrend line potentially. But again, that's a counter trend move, and that might require you to be a bit more disciplined and maybe a smaller position size, because counter trend becomes so much more difficult. Many traders suggest that counter trend trading is just not the way for them. When you've got developed long-term downtrend like this, which is going on about 10, 11 months, you want to see that change in many cases before bulls are really ready to participate. And for many traders, it's just as simple as, hey, this one's below the 200-day moving average, and so I'm just going to put that on the sideline until it gets above it. Maybe even set an alert that says, notify me when we're above the 200-day moving average, and then I can put this one back on my potential investment list. But as usual, I'm going to remind you all that there's a lot of ways to decide which stocks it is you're going to be trading in. Not every opportunity is ideal for all of us, whether it be from a narrative of an improving chart or from a narrative of an analyst upgrade. Regardless, have some rules that you want to stick with, everybody. Give yourself the playbook, and then just follow the playbook. It's that simple, at least as best as I can explain it. The details of the playbook are less important. The fact that you have the playbook and give yourself something to monitor and keep an eye on, that's the key component. All right, we're going to have to wrap it there, everybody. As always, a pleasure to be back with you all. I'm glad we had the opportunity to get together once more today, look at a lot in the way of charts. Looks like we are holding our levels. Let's just make sure that we are holding these levels at the close today. That's going to be the significant development if we can get it. So lots to keep an eye on, but even more to come for you here today on the Schwab channel. So stay tuned right here. Don't forget to follow Barb and me on X, Barb Armstrong CS and Kevin Horner CS. And if you like today's show, please be sure to hit that thumbs up for me. That'll help us a lot in the archive here when we get this back up and running for you in a couple of hours. But I want to thank you all for joining, for participating in the segment. As always, love seeing so many familiar names here in the chat with all of you. I hope you have a warm Tuesday, everybody. And I look forward to reconnecting with you all tomorrow for Trader Talk on Wednesday. Have a great day, everybody. We'll see you again real soon.